Hi guys, welcome to the live chat today. Hopefully everyone can hear me. Can you just, for anyone that's on at the moment, just hit yes if you can hear me okay. Just make sure that we're getting some sound through okay. Looks like Braden's there. Yeah, just give me a yes if you can hear me okay. And I'm not talking to myself. Excellent, thanks guys. Okay, so let's just get started. Now the first thing we want to just quickly go over is, excuse me, got a bit of a cough there. Just making sure that everyone understands this is general advice, so we're licensed to be able to give general advice, not specific advice for clients. I don't have the usual screen that Braden has, as I'm not set up to do these live streams from here generally, so Braden is usually the king of the live stream. So hopefully I can jump on today anyway and just give you a few different ideas and pointers about trading. I've worked with Braden for quite a few years now. Just a bit of background, I've been a professional trader for around 14 years. That was my main income source for those years. And I've sort of stepped back a little bit in the last few years and obviously run the TradeSetup business, and we've also got Trade Direct as a CFD business as well. So Braden's done a fantastic job. The results recently from his TradeSetup alerts have jumped, and we're seeing that success being fairly consistent over the 2 years we've been doing it, which 2 years has gone really quickly. And so it's interesting how not only selecting good quality stocks but also managing the risk has really helped. So there's been some quite choppy markets at times on the ASX, and I think one of the key things that separates the better traders out there from people that sort of get into that break-even rut or losing traders is their ability to be able to cut losing trades quickly. So that was one of the things I was going to go through, and just also to look at the structure of pricing and have a look at some of the areas where we consider high and low risk areas of trades, which will also come into, I think there was someone that asked about exits in the market, so I thought I could spend a little bit of time going through that as well. Okay, so let's get started with some of the ideas and overviews I've got before we get into some of the charts, like our wonderful RMD chart over here. I just wanted to talk a little bit about trading in a smart manner, because I think a lot of traders, they tend to trade and they tend to follow certain people in the markets. So they'll see markets move and then they'll get into the market a little bit late. And what I want to show you was how traders often are in at the wrong time and then they exit at the wrong time as well, and they repeat the process. So I've got this great little chart or little diagram here which I'll bring up, and I think it really represents what most retail traders do who are losing traders. So let's bring up this big chart here. I'll move the other chart out the way, and we've got a little bit of delay with the charts there. Now what I find is that, sorry about that, what we find here is a lot of traders, what they'll tend to do is they want to really see some confirmation in the market before they're willing to take a risk on the market. And generally they want to see price moves, but what often happens is price will move up. They're a bit nervous early on. They'll wait to see more buyers coming in, and then as price starts to move higher and higher, often it'll attract some news events because of that price movement. But the news that comes out, it's often after the fact. So it comes out after a price has already moved. And so that attracts attention for retail buyers. So what you'll see is often smart buyers will enter a market early. The news will start coming out, and whether that's media or whether it's online interest that develops from a particular stock or trade in the market, you'll see that. And once price hits these levels, you'll start seeing retail buyers coming into the market up at these levels. And I've got this little sign here saying greed and buy. And what we find is retail traders or lower skilled traders will tend to enter the market after buyers have already come into the market and really pushed the market up to a point where there's no new buyers that will likely come in after them. And so what you'll see is price will move up and extend away from its prior trading range, creates that excitement. Those new traders will enter the market, but there's no one else left to buy after them. And when there's no new demand for the stock, no one willing to buy at a higher price, there's not any upside potential left in that market, and the potential for downside moves from that point becomes a lot higher. The risk for a trader at those higher levels is very high, and usually these traders will lose money because price won't move up enough for them to be able to take any sort of profit off the market, so therefore they'll hold those positions. And if they keep holding those positions and you get a few sellers that push price down, there's a larger proportion of people on the losing side of the market then. And what it creates is a little bit of a snowball to the downside. And so as traders bail out of the position, if you can see my mouse here, you'll see price dropping to lower levels. That means a larger proportion of traders are losing money. And so from that, you get more people with now losing positions that start getting out of their losing positions or their break-even positions. And that tends to drive the price lower. So what we tend to get is an exaggerated price move to the downside, which creates fear, and especially in those traders that have got into the market quite late in the cycle. So they'll tend to really panic after the prices move down. They tend to be late on the entry, late on the exits. And a key point of what we try and do with our trading is to make sure that we're not those people that are selling out late after a downside move's occurred. We want to be seeing the risk early, and we want to limit our losses on each trade that doesn't move in the direction we're after. So the other issue with traders is they get out late on the cycle through fear, and often that's a turning point when the market moves up. And I think this is a great little saying here, repeat until broke. So they're getting into the market at the wrong time, they're getting out of the market at the wrong time. And for markets to move efficiently, they tend to create the most pain for the most people. So the ones for the people that are uninformed. And so one of our things that myself and Braden look at is how are traders positioned in the market? Is there a large skew of retail traders selling the market or buying the market? An example of that, which I'll quickly bring up, is Telstra. We did have a short trade on it, which we did quite well on. And when we looked at the amount of retail buyers and sellers in the market, we often found Telstra almost at 100% for retail traders trading the long side of the market, which means they've bought the market in the expectation of it going up, even though the price has been falling. So for us, the opportunity to make money from the downside of the market was there, in that the chart structure was moving down. There was a lot of traders looking to buy it and try and pick the bottom of Telstra's price move to the downside. So what you'll find is a lot of traders will look at the dividends, and they'll look at any of the news, and they'll actually, many people, and I think it's human nature, is they'll interpret any sort of media or press releases and they'll only look at the positives rather than looking at it from an objective perspective. So what you find is traders will they'll look at Telstra, it might have some negative numbers come out, but they'll look at the positives and they'll think, oh, it's just about to turn around now. But there's no objective price movement that shows that there is any new buyers about to step into the market. And so what you've got when you start getting a stock that's not improving their earnings and not becoming a better fundamental opportunity, which will show up in price, you're actually seeing the fundamentals of Telstra worsen over the last year or 2 years, and it's shown up in the fact that price can't make new highs and is making new lows, lower highs, lower lows all the way down here. And it's the fact that there's a skew of traders looking to buy on the retail side, not the smart traders, that generally what we call the retail traders, the traders that aren't skilled at trading. It gives us an opportunity to take the other side to those retail traders, and when they are forced to close their positions, it means that we're going to increase our returns based on the profit moves. So Nando, what I'll do, I'll get to that question you've got there. So Nando said, how do you work out if you might do agreed buy? So I'll explain what I mean by that with these pictures here. So let's just move this chart across and we'll go into this little chart. I'll see if I can just get this one a little bit larger so we can see it a bit more. Okay, I think that one's a bit too large now. Okay, hopefully you can see this on screen. So you can see the greed buy, fear sell. So what I've done is I've put a similar area on a chart which is actually in a good uptrending movement, and a chart we would look at for potential buy scenarios, but we also look at it from a risk scenario as well. And so one of the ways that I measure the risk there, Nandor, is I look at where I'm looking potentially to buy and sell. So where I consider the greed area would be as price moves away from its equilibrium point and expands from, so you get contraction and expansion in price movement. As price makes an expansive move, that's increasing the risk and entering those areas where that greed area, where the retail traders are likely to enter the market, and at the time when it's getting to an extreme point. So if you have a look at where we considered in these drawings here our low and high risk areas, what you can see is the high risk areas we've marked in pink are when prices extended quite away from the moving average equilibrium point that we've got here. And then when prices come back down to that equilibrium point, that opens up the low risk opportunities that we're looking to buy, because the bigger trend is still to the upside. So we want to look at the major trend, and then we want to time our entry in low risk areas, not in high risk areas. So we can see price expansion away from the moving average is what we consider that greed buy area, which we don't want to be involved in. We want to be involved in once the fear sell area comes about and we start seeing some new buying entering the market with the bigger uptrend, that's the time when we're looking to get new opportunities as they come in. So you can see there's a number of opportunities. Now, it's not as easy as just selling highs and buying lows, because we don't know how extreme these price points are going to get. What we do know is these are areas where we want to manage risk. And so what you'll find with our trading, what Braden does is he'll generally sell a portion into these areas. So we're looking to reduce our risk by selling, say, 50% into these specific areas where we get price expansion from that equilibrium point. And you'll probably see He's done it with a few of these stocks that have moved strongly. Qantas was one that moved strongly up. I'll just see if I can get a chart up to show you an example of that. Okay. So you can see sort of price out of that equilibrium point. Actually, it's on a weekly. Let's bring it up on a daily chart. So we looked at price movement as it pushed above this $6 area, which I'll draw a little circle here for, into there. And then I think Braden took off as price moved away from the moving average. And I'll just get my little arrow up here. You can see price extending up to this area here. I'm just going to see if I can make it a bit thicker. So I don't use these drawing tools that often, so I'm not sure if you can see that very clearly, but basically I've drawn a line up so showing where prices moved away from the moving average from much closer to the moving average there. And so it was an area where we started to see price extend away, and you also see in these areas, oops, I've got the arrow up here, let's delete that one. Now the timing is, you can't always be exact with this timing, so that's why we tend to reduce rather than close out, because sometimes price will go a lot further than what we expect. But it's all about, as traders, it's all about managing risk, not trying to perfectly time when we enter and exit the market. So our whole premise is to make sure that we get a return greater than the risk that we take, and do that on a consistent basis. So this could be an extended area here when prices moved up from $4 to $5.20 here, but what we found was in this case price actually moved up to a much higher level and got up into the high fives before we got a retracement. So what we're trying to achieve is look at how price moves from our moving average or our equilibrium point and expands away from that. When it does that in what to us seems to be an unsustainable fashion, then we'll look to reduce risk, and then we've got the opportunity to re-enter once we see another setup where prices come back to a much better entry to time our risk. Paul, so we tend to use, I'm not sure with Braden, I tend to try and leave the decision to Braden because he understands the structure and the timing, but I'll usually, if I'm looking for faster entries, I'll use a 33 moving average. If I'm looking structurally, I'll tend to use like a slightly longer one, a 50 moving average, but it's actually, interestingly, it's not the moving average timing that's the important thing. It's what measurement you use on your time frame to give you a picture of where risk is at its lowest and where risk is at its highest. And so that's why I do tend to swap a little bit just based on speed of what I'm looking for. So a 33 moving average might be something that's on a stock that's maybe a little bit more volatile, and I'm trying to capture a faster move, so I'll use a shorter time frame there. But when I'm just looking at maybe trying to make sure that I stay in a market move, and I'm just generally looking at stocks in the market and just reviewing them, then I'll tend to just have that 50, because what I like to see with the 50s, it tends to hold more price bars above its moving average on a stronger trend, and so I'll try and time off those 50 moving averages with new entries when I see a good setup. So hopefully that makes sense. A 20 and 50, yeah, so Braden's put in 20 and 50 there, so he tends to use I guess the 20 will be a faster moving average. 50 sort of gives him an idea of the overall structure and making sure that it's continuing on an uptrend if he's trading a long position. All right. So let me just also get up some other charts here, and I thought we might as well go through a couple of the charts that we are watching now. Braden's had a really good run with some of these stocks. Sorry, I'm just going to get up. Looks like on this particular chart I've lost the moving average on there, but I'll put that back up. I'm sure Braden's charts look a lot nicer than mine. They've got a bit more colour in them. So we'll just use 50 moving average there. And we'll put in a bit of volume as well. Okay, and we'll also mark up just where the high risk and low risk areas too are on the market. But let's first of all have a look at the weekly. Probably something that I do tend to focus on is I do a top-down analysis. So I'll look at longer term timeframes first and then move into the shorter term timeframes. So the weeklies give me an idea of the structure over a year or two, and the dailies give me more of a timing opportunity from that to be able to time the entry of new trades. Yeah, so okay, so what we got is you can see price moving vertically up here from 540 all the way up to 990. So it doubled in price, this on a weekly chart. Now just getting back to that high risk, low risk, you can see if we look at the chart here where it did move up strongly, the first signs here of rejection is where price starts to break through the last 3 or 4 days of previous highs made, or 3 or 4 weeks actually, a price here. Now I'll just get my little drawings up here. Probably not the one I'm after there. Maybe this one's the one. See if I can make this a bit thicker, this chart. No, it's not going to happen. So what I want to show, just the extreme moves. So this, when price is this far above moving average, and we start to then see price movement confirming some sellers starting to move into the market, that's when I want to be a little bit nervous. Now we also did see pretty much each week up was a higher week here, so there's no real risk at that point. Then we saw a gap up over at 840, and you notice there was some downside bars, but notice they didn't break even the prior bar at all. Some of the things, when you start to see some signs of weakness, you want to see the selling break through a couple of prior moves up, and the fact that it's sort of held within one day here, that's just often showing profit taking, which within an up move. It mightn't be a bad area to take a 50% off a trade here, because it has extended so strongly from around the $5 to $8.50. But you probably need more evidence to close out a full position here. And we had another round of strong moves up to that area just below the $10 move. But what we started seeing here as the selling happened, and this is where you start to become more aware, is when it breaks 3 up days with downside selling. That's probably where you want to start going, okay, this might be a much stronger retracement or a move back towards that equilibrium point, because it's so far above the area. You can see this move up. That is a big move away from the equilibrium point, which tells us that we're taking on more risk with the trade. Let me just get rid of that one. Yeah, so just something to really be aware of. Just be careful of the risk in the trade by using your moving average as a real way to judge where price is in relation to the risk you're taking on. So extending away, that's a risk. We need to start looking at closing a position or just waiting for it to come back down. And if we can time it off these moving averages when we start getting these areas where it's holding higher lows, that gives us an opportunity to get that expansion from a contracted move. So that's all we're after. We're just trying to get those expansion moves. And you can see with the latest trade here with ResMed, we're getting that expansion starting to take shape here as price finally moves through the $10 mark. I think it briefly touched above $11 today. When we're starting to extend away, but we're not fully extended. So I think Braden's got to stop just around the levels where it's at for 50% to take off, because our reward that we're taking on the trade is greater than the risk we're taking, and that's really important. So sorry, I'm probably missing a few of these questions here. Let me just have a look. So yeah, once I get talking about these things, I tend to chat away and forget about looking at these questions. So not like Braden, he's always onto it. Helen, yeah, do you like to apply an ATR? I do. So what Helen's asking is, do you like to apply an average true range around that 3-day rule? So the range is what's the general trading range in each particular day. And so sometimes what you'll find is you'll start getting some excitement in certain stocks, and the average range of between the low price and the high price can often change. And so it's quite a good question in that if the range is starting to change, and you've got a hard and fast rule that it's got to break through 3 days, that might be quite a large amount of profit that you might be giving up because the range has become larger. So the way I do it is I actually eyeball it, Helen. Just it's not a hard and fast rule, but if I see large ranging bars up, it's telling me, and that's after a lot of smaller ranges. Often that's a sign, especially after a trending move, it's often an exhaustive sign. So when that occurs and when I start seeing exhaustion bars like that coming into play, so you see these are quite wide-ranging bars. If I go back to this chart on screen, I might just make it a bit larger for everyone to see. If you have a look at these bars here, very strong, solid bars, but it's after a big move up already. And to me, often you'll see volume increase as well in those areas. In this particular case, it was only slight increases in volume on those up bars, because what that's telling you is that means there's more people that need to bid higher prices to push price up. So you're getting more volume, you're getting wider range bars, but it's also telling you that people are starting to sell to those buyers to get that increase in volume. So when you see a big directional move, then you see wider ranging bars on higher volume. Just beware, that's usually an early signal before price turns of exhaustion, because what's happening is there's more supply coming into market to meet that demand, which is creating that extra volume. And so those higher prices, even though price is still moving up, there's more selling coming in and that's what's creating that higher volume. So if you see wide-ranging bars, extra volume, and price has already gone on a long trending move up, just start to be careful around those areas. That's true there, Helen. Yeah, no eyeballs are good watching for the exhaustion. So um, that's probably the signal I'd start seeing. I'd see a little bit of extra volume, big bars on the upside after a move up. That's telling me this is likely to be exhausted. And even in this area prior, where it only had a little bit of selling and went for a secondary move, this big wide bar up here and then a gap, and the second one after a move, that's telling me that there's likely to at least be a hold up in the upside price movement. There's following that sort of price action, there's likely to be some selling coming in a little bit, and in this case it was a bit of profit taking. So I'd probably reduce risk in there, and then when I saw some selling coming in here, I'd reduce risk once it broke down through the last sort of 2 or 3 days of trading. That would be risk because I'm looking at it's extended away from the moving average. It's gone really strong. It's almost doubled in price. It's a really good area where sellers would likely start entering the market. So hopefully that gives you an idea just on a risk reward perspective. It's not specific to a company's fundamentals. It's really just watching how many buyers can actually keep pushing price up at these particular times. And if you can use those moving averages as a bit of a guideline, and when you see price really shoot up and away, just look at it from a risk perspective, and maybe there'll be areas where you can reduce risk at optimal times rather than waiting for a big lot of sellers to come in and then selling after the fact. Because what we don't want is to become like a losing trader in the market, enter too late, and then get out after the selling's exhausted itself. So we don't want to be caught in that loop, which most traders do get caught in. I've done a few talks previously, and one of the things we can keep a real close eye on with this sort of structure playing out is the currency markets, because we actually can see live retail traders with some of the things we look at, and we always see traders getting into the market too late and getting out of the market too late as well. Okay. Yeah, Clement. Yeah, so that was 2000, around 2007. So yeah, that was one of my bigger years there as a trader. So there was a combination of two strategies there. So exactly what you're seeing here, and this is the strategy pretty much I've done year after year, which is shown here, and this is what Braden's using. I did have also there's arbitrage opportunity, and that was using warrants in the market. So I was able to have a slight timing edge, but all it would give me, Clement, as a timing edge was it meant that I could hold risk to the cost of my brokerage, and then I could open up trade in my direction, but I still had to use timing and the skill sets to be able to open up those winning trades with the arbitrage opportunity that I had. So it did help in reducing risk even further than what you'd normally get using that timing arbitrage, but the same strategy was in play on that. Yeah, so I was doing huge volume. I was doing around 40 million a month at that time. Yeah, it's good while it lasted, but yeah, can't quite trade in those numbers anymore because of the changes. High frequency trading. I think I was the king of low frequency trading at the time. Yeah, so I'm an old dinosaur now. All right, so let's just bring up a couple other charts here that we're keeping an eye on at the moment. CAN, which is moving really nicely. Now there's a little bit of a caveat to these extended price moves, and what we often find, which is really interesting for a lot of people, is when everyone's in a winning position, often stocks will go a lot higher and a lot further than anyone would ever expect. And some of these stocks, when they do that, it's often worthwhile leaving some money on a trade, not closing out a trade too early, for trades that are making new highs, the ones that have got what we call blue sky ahead of them. So they've never had any history behind them of selling and buying cycles where traders will react at specific times, because often that's what will cause that support and resistance zones. But when stocks are making new highs for the first time, we look at that as blue sky. And because it's funny how things happen with some stocks, but often you'll see some stocks make these unbelievably huge moves, and it doesn't seem to make any sense compared with the fundamentals of a stock. But it's a bidding process, and when everyone's on a winning trade, they'll tend to hold that trade, and so prices will go a lot further than what people would expect. And of course, we don't know which stocks are going to do that, but we do try and open up some of these stocks that do have blue sky. We'll try and let them run much further than what we would with other stocks. And so just on this particular stock, CAN, you can see it's had a huge move already. It's moved from around the sort of 50-60 cent range up to around the $1.70, $1.80 at the moment. We did get a nice retracement, so it moved up to 150, back down to $1.10 or so around a 30-odd% retracement, and we're going for a new high here. So we call that blue sky, where it's making new highs, and we're probably looking at an area around just with that structure there, where we'd like to see this one move to around number $2 because of the fact it moved to around number one, or just around the 150. What did it get to? Let's have a look. You often see the type of traders that are in a certain stock. If you see stocks moving to round numbers, then retracing off those round numbers, often with projections, you can sort of project a next move up based on the type of traders. And with a stock like CAN, you'd expect quite a few speculative traders, and they'll be looking for prices to move up to key price levels. So we can use that to our advantage for timing. Let me just have a look. I'll just make sure everything's still working. Just noticed chat disconnected there. Looks like it may have come on. Can you just hit a yes if you can still hear me okay? Just don't want to be talking to myself there. Type something. Yep, okay, we're coming through now. Sorry, there is a bit of a delay there, so all good. Okay, so yeah, just one thing to remember, and these are just some sort of tips and tricks that I've learned over the years, is with stocks that are hitting those new highs, just give them the opportunity to run, even if it's a third of your position or a quarter of your full position. You can lock in profits so that you've got no downside risk. But blue sky trades, I always want to try and give a little bit of movement to, because you don't know which one's going to be the new CSL, or there's a few others that have just gone ballistic. There's a healthcare one, Blackmore's, BKW, I think it was. Is it that one? Let's look on the monthly there. You look at that. Oh no, that's Brickworks. But even that one, the $3.20, when it was making its blue sky moves, it went from $3.20 up to $14, $15. Have to remember what the Blackmore's code is, but it went from $30. It was one I rode for a while, but even I couldn't ride it all the way, and that went up to around $200. So just try and, it's really difficult to do, but if you can leave a portion running, it can really help. And you get one mover that's like that really runs hard, it can cover 40 or 50 losses as long as you take those losses with small losses, open up your winning trades. That's the whole name of the game with trading. BKL, yeah, that's the one. I knew it was BK something. There's the run there. So obviously the risk increased as it went up, but this is the example of a blue sky trade. You can see on the monthly chart that move from, and even when it started off, it was like in the $8-9 range, but it had a magnificent move. Probably went way further than its fundamentals than it should have, because the retracement was fairly sickening for people that held as well. 220 down to around the 90 mark there, so more than a 50% retracement. Oh, well, I guess, yeah, the retracement over 50% downside. We're starting to see some new buyers enter, and this move is quite strong at the moment. Just beware too, if you are looking to trade BKL for a move, often when you get such a deep retracement, the secondary move doesn't break the prior highs. So keep an eye around the 50% level. So where are we? 220 down to 90. So around probably where it's at now, maybe to the 160 prior high, that little retracement there. You might just start getting some resistance around in that level there. So I don't think there's too many people trading it at the moment, because $160 a share, it's hard to buy a lot of shares of that one. All right, so what do we got else here? TAW, it's one that we've got on the go. I'll just bring that to the weekly. You can see here, this one has been moving up, and what I mean by blue sky versus and prior price history, see previously it's had higher levels, and it's also, so it's had that 50-cent level, 48, moved back down to 28, back up to 46. What this buying and sell, this creates a memory for the stock, and traders that have either, and usually it's losing traders previously that have traded TAW, for instance, they'll usually react to price when it moves up to previous prices that they remember, especially where they felt some pain. They'll often look to either reduce their position size or to get out of their position at similar levels. It just seems to be a human thing where we tend to react to things in the past that have caused us either happiness or pain. And also just where creatures of repetition. If you think, let's say you're at a cinema and you go out, the halftime break, probably cinema's a bad one because everyone's got often the specific ticket they've got to sit down. But let's say you're at a kitchen table, you go out for a break. Generally, you'll come in and you'll sit at that same seat. You won't go sit at another seat. And it's that habitual repetition that we do. Often it relates in all our lives, and it's reflected in the stocks, because it's still humans that are generally trading stocks, and they'll tend to move in. It's not exact, but it's we tend to see things repeat quite often. Okay. So that's Tor. So what we're looking at here, nice little reaction back down to moving average on the weekly. Then we got an expansion move out from the 30s up. I think our timing was a bit later. We based it more on the dailies. You can see beautiful chart setup, and this nice little curve is always really good to look for. So you can see this price move down, higher low here, higher lows in here, and I really like to see all the price action just sitting just above the moving averages, and so really nice areas in here, potential opportunity, buy opportunity. Expansion up, we're starting to get some risk here. I think Braden's taken half his position off, and because it's an obvious spot here, and we'll see if there's another leg to it, but risk is higher at these levels, and obviously these earlier levels because we've gone from contraction of price to an expansion of price and away from our MAs. So we can see that risk. So that's TOR at the moment. MGE, that one's moving up really nicely. So we've got our area here. You can see the congestion. Price has sort of moved up in two legs. We're going up to prior highs around that 298. We're quite close to that. So stock looking good. Nothing wrong with it at these levels, and there looks like some room for it still to move up to higher levels from here. A little bit slow moving is the only hassle for that one. NCZ, this one's an interesting one. On the daily, really strong. Another one of these ones that I think we could fit into the blue sky area. So it's had a dramatic move up. It's had a lot of, there's a lot of people starting to follow it. There was a really good report out from Credit Suisse on the fundamentals of this stock. They see that the mine has been, it's close to transport. It's got real potential for volume of resource, and I think there's a few other pluses about it. I think just the infrastructure's set up for this particular mine's really good as well. So I'm sure just doing a Google search you'll be able to find out a lot more about it. I do speak to some guys at Patterson's. They're very excited about this one. They see it moving up towards the 250 mark. I don't take analysts' words too strongly though. But just to let you know, if you are interested in that side of things, they really like the potential of that. Yeah, so that's got real strength. You can see obviously high risk because it's moving up so hard away from the moving averages, but we consider this one, and this is a daily that I've just moved it to. It's not an extreme point as yet from our view of it. One thing against, it's hit this 160 level twice. Looks like it's just chopping around at this sort of area below the 150s at the moment. Nothing to show us that we should sell this, and the price movement is aligned with potential upside in the future if everything goes right and new buyers step into the market. We just might have to be patient here because it might spend a bit of time just grinding out and building a consolidation zone. We'll see how things go. But yeah, good chart structure, and the fundamental news being told to us is good. So if those guys are correct and new buyers step in, then we could see some higher levels. I think we're up about 10% or so from when we bought at the moment. So we've got a bit of a buffer there anyway with the profit that it's already moved up. Okay, there was one I was going to look at. NVP is one that I've had on my radar for quite a while. I like the story, and it's just starting to really show some good price structure here. So let's go to the weekly first of it. And to me, this is really nice setup, and you'll notice the more you listen to myself and Braden, the more you'll see the same sort of thing that we look for. And it does help with your timing skills, I think, to be able to see some of this. So if we look at the price action, hopefully I've got the right thing. So interesting, really vertical move up from $3 to $6, so 100% move up in a very short amount of time on the weekly chart here. You can see between March and June 2016 went really too hard, too fast. Came down, retraced, but another thing to really be wary of is when you see a really strong move, but then the secondary move can't match up to the original move, so it doesn't get quite as high. The easiest way to think of it is picture an M. So you see, I'll draw it over here where I've got some space. So price moves up vertical, comes down, moves up, but can't make the previous high, or maybe it does make the previous high, but just can't push. If it was going to be strong, it should move up to these sort of levels up here and make new highs. The fact that it doesn't is telling us something. It's telling us that there's no new buyers ready to step in. So this area here starts to become a bit of a risk, and it's a good area as an early exit, especially if your moving average is down around these levels. So you're high risk because you're away from the MAs and you're getting this M pattern. So even if it's a little later, just if it starts breaking these lows here, just be aware that your risk is increasing. Might be a good place just to reduce risk, or if you're quite concerned about it, you can always close it out and re-enter if it starts sort of coming down and creating a new setup, a typical setup that Braden looks for. Basically a W the other way, then you can time entries off that. But that was the start of quite a significant retracement. But since that point here, we've made the lows, a couple of higher lows in here, and then we're really setting up nicely with our W pattern here. So a low, slightly lower low, but in the scheme of things that doesn't matter. But what's happening is most of the price bars, for first time in quite a while in here, let me just draw a circle. Basically nearly all the price bars in here are holding above the moving average for the first time. Over here, it's spent quite a bit of time with all the price bars below the moving average, or most of them. Little flicks above there, but now the structure's changed. So what we're seeing is not just, and it's not just people stepping up to the plate buying, the structure that people, when price does that, what it's showing you, or what it's describing for us, is that the fundamentals of the company is starting to change. Because what we're seeing is each week we're seeing more people willing to buy a higher price than they were the previous week. And so we're getting price action as an average holding higher levels than previous. So whether it's insiders, people that are deep involved in the company start seeing, okay, we're getting closer to a potential deal, or there's a new mine that's starting to show promise here, or our production is going faster, or we've had a good crop, whatever it is, you'll start seeing it by people starting to buy into the stock, and they're usually the smart money that gets in the consolidation phase before it expands. So we want to be part of those guys. We want to make sure we start seeing those areas where the fundamentals are changing, because we're going to be the last to know when the next report's sent out after it's already happened. It's hard to have good timing mechanisms if you're trying to wait for financial numbers to come out to prove something's working. We want to get in as the insiders know before the numbers start coming out to the public. So this is the way we try and see that. We look at the buying and selling dynamics, and we marry that up to a stock that has a good product and a good pipeline potential. So with MVP, for those that don't know, they've developed a product called the Green Whistle. That's one of its more famous products. You'll often see when footballers get injured and do like a knee injury or something, a guy will unwrap this whistle and the player starts blowing on it. Hopefully I'm not a person that'll ever need to use one, but obviously it reduces pain, and it's one of the few non-opioid products out there. With the US, there's a real problem with opioid addiction for painkillers, and it's probably reflected in other parts of the world. They recently got a deal, which you can do a Google search of, but they're being put into all the English ambulances, so there's some deals there. They haven't got US approval yet, but they're expecting it, I believe, in 2018, and possibly if that is the case, you might see a re-rating of the stock because of the opioid problem in the US. This might be something that could help in reducing that issue. So they're all the fundamental cases for the potential of it. You can see price starting to really start showing some action here. We're moving up towards $6. So I like the look of this price structure. I like the idea and the fundamentals behind the company. If it all keeps aligning, then we could get some follow through and get it moving up to new highs. But we'll have to wait and see how buyers step into the market, whether that's the case. One of the things to always be wary of too is not to fall in love with the stock and not to believe the idea and the thinking behind the stock over the price. Price to us is king, and if we start seeing, we don't want to, let's put it another way, we don't want to be in a stock that has pricing below the MAs. So when the majority of price bars is below the moving averages, we don't want to be long the stock, because that's telling us that the actual buying and selling movement doesn't relate to what the stock's actually doing in real life. So no matter how good the fundamental news sounds, it may not be what's really going on behind the company. And often if you get married to a stock, it'll be too late. And we can name a lot of stocks that have pretty much gone to zero or have completely failed that seem to have good fundamentals behind them at the time. So there's Babcock and Brown is a good one that I remember that I watched and watched a lot of traders lose all their money on, because right till the end they were saying how this stock's going to recover, how it's got great fundamentals, it's going to be the next Macquarie Bank. Didn't quite get there. Anne Marie, yeah, so I can see a question there. How much emphasis do you put on volume? I do put emphasis on it in certain circumstances. So what I want to see, and there's a really good example just with this, I'll just move this volume up. What you can see over in the volume recently with MVP, I like to use it as a confirmation marker for me, and also as an exhaustive marker as well. And let me show you what I mean from this is more of a confirmation marker. You see the price starting to build up on the weeklies just in those last few weeks as prices moved up from that level around the $5 mark. So for me, prices moving up on increased volume out of the consolidation area, when I see that, that gives me confidence that I'm on the right side of the market and that there's good potential for a continuation of the price move. Also on retracement, on selling, I don't want to see a lot of volume on selling prior to when I'm looking to buy. So if we look at, I'll just move this down a little bit, but what we can see is selling really dropped off in this area here. So I'll just circle that. In this area here, and this is where we had selling, and notice, so there's a few things happening here. It moved up to $5.40, and then the selling here pushed it more into a slow, very slow moving downside move to just below the $5. When you're looking this on daily bars, it actually looks pretty scary because it's over a few months and prices gone from $5.50 to $4.90. Which will scare a lot of traders out of the market. But all that's happening is there's very low volume. There's no real news coming out, and it's just washing out traders that are getting nervous at that particular time. But there's no evidence of really strong hard edge selling that this thing's not is going to go to new lows. Also, the angle of descent of the selling is very shallow. So this is on a weekly chart. We'll bring it up on the daily. You can see what often happens is, and especially nowadays, is for price to move and go up. If we just think about it from a perspective of supply and demand, if everyone's bought a stock in a certain stock. Let's say everyone's bought MVP and they've bought up here at $5.40, for instance. Now, for price to go up from that $5.40 point, let's say it's over here, there needs to be new buyers on the sideline coming in, so a new supply of even more buyers coming in. Now, if there's been a bit of volume and prices moved up, which it's not easy to see because there's an outsized volume, there's probably an off order trade back in over here in October, but there's actually volume increase on this price move up here, but there was no follow through of price movement. So what that shows, and we can see this after the fact, is that there was no new buyers coming into the market. And so when there's no new buyers, what'll often happen is there'll be selling just because there's no new people at that point in time ready to step up to the market. And so price will tend to grind down and wash out traders. And you'll find you'll get in this phase of the market where it just does nothing for a few months and even gradually moves down. Just before a big move up happens, you'll often get this final washout that just takes out stop losses at the lows here. So a lot of people have their stop losses really close to prior lows. And you see what happened looking back, and this happens quite, if you have a look at currencies, it's often an area to really keep an eye on. If you can see, and it's a good way to trade in a smart manner as well, but what you'll see is price will take out the lows of the market, so it'll take out all these stops. So what it's doing, it's getting rid of people that are holding long positions. So the less people that are holding positions, the more potential supply there is from the sidelines. So for price to move in the path of least resistance, there needs to be a lack of buyers at a specific point. Best way that that can occur is if price moves to a point that gets rid of as many traders as possible. So we get price breaking those inside lows, creates the most pain for those people, unfortunately, that have just been stopped out, and then you start getting buying coming in because it creates a vacuum. So we start seeing the very earliest signs, and for our trading strategy, we're not going to be able to trade that particular area there because it's too hard to know what's actually occurring until we get some more facts. So price washes out traders, we get a move up, but this starts to become promising here in that if it was going to be weak and price was going to sell, this should have driven down to new lows here. That would tell us that there's sellers. This is a stock we don't want to be involved in. Prices dropping away, there's real selling coming into the market. But the fact that it held a higher level here gives us an opportunity to look, okay, this isn't weak. There's no selling here, and buyers are starting to step into the market in these areas here. So it's not our typical entry zone, this particular area here, but something that I did keep quite an eye on. I don't think Braden's got it as an actual buy. I think he's had it on as a watch. So we get price moving up. This would probably be the area where I would be able to time an entry off because it's still relatively close to the moving average. It's broken above a big consolidation area, and then we've had very minor retracements, so from the sort of 555, and then it started moving up. So in this area here, we got an expansion move, then we're getting a nice little W pattern in here coming in as well, and it's just started to creep up from there. So I like the look of the structure. It's in the hands of other traders whether it does keep going up, but from our structure and the way we look at things, we think this has got good potential. So that's just another one, and that's just also, I think, good to be able to go through and just explain our thinking behind why we look at stocks and what we look for. I think can often help. Hopefully I'm not just repeating all the stuff that Braden says, but just sort of putting a little bit of a different spin on it, and just so that you can sort of get an understanding of why we do what we do. Okay, so let's look at what do we got else here? GPT. What else here? This one's one here that's probably like on the weekly. It's in a bit of more of an interesting zone. This one I probably am not as keen on. We're really just tightening up here price-wise on the weekly. Now on the daily it shows it does have a little more promise, but just on the weekly it's really in that grinding zone, and so we're not absolutely sure that this has got legs above it because we're running into two big levels. You can see this area here had a lower high and two lower highs in effect, and then drove down, but it's also getting higher lows. So to me it's looking at a weekly, and also you can see the moving average is pretty much flat, so there's only the very slightest of skews to the upside when we move into the dailies off the weeklies. So we'll do that. You see most of the price bars, and this is what is going for it for upside continuation, is that most of the price bars holding above the moving average. What it does do is limit our risk. So risk we can look at below here because that's two levels below. So we've got very little risk on the trade because it is in a consolidation range, but it does mean that it's a higher risk of failure, but a lower risk of a monetary risk on this particular trade. Probably what I'd like to see for this would be a break above these levels. So you want to see price move up, maybe a little bit of a retracement in here, and then if we could capture a continuation, that would be an add to type position, or if you haven't traded this particular one, that would be a stronger entry because there's more of a potential skew coming out of the consolidation into an expansion area. So I'd like to see that sort of structure come into play, and see it go from those levels. Yeah, so hopefully that that helps in understanding the structure there. We got any questions? I'll get a couple of questions too before we finish for the hour. It goes really quick when you start chatting away. And I've probably missed a few questions. So if you put a question in and I've missed it, just put it in again, because I do get carried away with talking through how things work and how I look for certain trade setups. Okay, I'll just give it a sec to come through. Sorry, sometimes these things are a bit delayed. I'm just looking if there is anything there. Okay, so we're on the volume question. I think I answered that. Yeah, so just while I'm waiting, there's no, I think I've got a delayed. This might be a bit delayed. Let me have a look. Yeah, so that's the problem. So I've got a bit of a delay with those questions. So I'll have a bit of a look. Yeah, I'll just get Attila here to have a look, see if he's got any questions. Waiting. This one, oh sorry, this is GPT group, Helen. Yeah, so it's, I think it's one that Braden mentioned earlier, unless I've got the wrong alert. Not sure if Braden's on at the moment. Yeah, so Braden sent an alert out there. So he's just got on watch, and I think that's fair call. I don't think it's really quite set up, and he's actually drawn exactly what I've drawn for a potential entry, what price has to do to become an entry. Yeah, so So that's good that we're thinking along the same lines there, because I was thinking that he was a bit early with that one. But you can see that's the sort of structure. We want to see a little bit more buyer, or a few more buyers stepping in before we want to time that for an entry. All right. Okay, guys. Well, look, appreciate everyone listening in. I think we'll end it there. Thanks very much. If there's any other questions you have, feel free to send them in to the support at TradeSetup.com.au. Okay, Michael, I'll grab that one. Sorry, I just saw that. So I'll get that one up before we finish. But yeah, if there is any questions, just make sure you send it through. Let me just see where my charts are. All right, that one's hiding. There it is. Shelf. Ah, here it is. Okay, so that one was AWE. Yeah, I have been keeping an eye on AWE. It's come out of a little bit of a flat spot there, and so that's what we like to see there, Michael. Just seeing a little bit of strength coming through. If we just go to the weekly, I'll just get the structure of it. So this is really just really early signs. Nice, good that we're starting to see a big basing period. So what we're seeing is a lack of sellers, probably for the first time for quite a few years, really. So really, we've come down from $2 and just got down to our 40s. Pretty significant upside move up to the 90s, but then no follow through. You can see all the price action below the MAs on the weekly, but just starting to see signs of new buyers starting to step up out of that basing area. Now, it's not a stock that we're going to see blue sky because of the past history of AWE. So expect that the upside, you'll get peaks and troughs if we do get buying stepping in to the market, and there should be plenty of opportunity to time areas to buy from that limit your downside risk. So we get to the dailies here, you can see really basing area, it's held around that 44. Because of the structure and the amount of downside trading to this point, what I really want to see is I want to see buyers step in, and I want to see a lack of selling at a higher level than this. So if we do the structure, I tend to like to look for, especially when stocks have been in a long downside period of trading, I want to see added evidence of buyers stepping into the market. So whereas if it was a new stock, I'd probably be active a bit more quickly in those particular markets when I haven't seen a lot of selling previously. But with these ones, I want to see more proof that there's buyers stepping in. And what I want to see is, if I draw it up, so we've got our first move that's just broken previous highs around so above the 50-cent mark. So let's say that's our 50 cent. We've just had price move up to just above here at this point. This is the sort of structure I'd like to see a little bit of selling absorbed. I want to see it make a higher high than that level. And then I'd like to see, so what we find when prices react, usually if prices just came down once and then went up to new highs, what you would find is that many traders would, it'd be really easy. All the indicators would go, okay, here's a retracement. This is when you buy. But trading always creates the most pain for the most amount of traders, is what I think. So what you'll often find is price will move up to get those people that are using indicators into the market, and then it'll go down again to wash them all out, and then it'll make its move once it's washed out traders. So what you tend to get is this W type pattern. It's very similar to the M pattern I mentioned previously. So when you're looking to sell, so what I want to see is I want to see that secondary one to time an entry. Now it might be just below or it might be above the previous low, but if I can wait for that secondary one, that'll give me more confirmation. And so I'd want to see all that price movement holding above that sort of high 40s, early 50 level before I time an entry. So just to give you an idea of what I'd wait for before taking a trade with AWE. It doesn't mean I'm going to be right. AWE might just, on some good news comes out, shoot straight up, but I try and base all my trading around because I want to be successful over a lot of trades. So I try not to look at a specific trade in isolation, and by structuring my trade the same way each time, it can tell me whether I'm being consistent in the way I trade and consistent with my stats to make sure that I am successful over time. So I want to be able to have specific strategies that I'm following where I can, what I call, box up my risk and keep my risk low compared to my potential reward. If you look at this area here, what I want is that risk to be defined, because if it's made a low and a second low and is moving up, if price then rolls over and moves down again, I shouldn't be in the trade. It means that it doesn't have enough buying strength. And because it's tested it twice, that means that I know if it goes down a third time, well, I've got to wait and look at other opportunities because it's already tested those lows 2 times, not just a single time. So that's why I'm waiting for that secondary test. The other reason is that if it does confirm after 2 lows, there's a higher likelihood that the expansion will be greater than the risk I'm taking on the trade. And that's the aim. That's what I'm trying to do. So I'm boxing up my risk so that potential reward is greater than the risk I'm taking. And if I can do that successfully, I've got myself a profitable system. And I think that is the key to what we're trying to do. We're not trying to be right with every trade. We're trying to box up our risk and reward so that reward's greater than risk on a per trade basis, and doing that over a number of trades to create success through a skilled business operation. All right, guys, I might wrap that up with my little sermon there. Thanks very much, everyone, for listening in today. Appreciate your time. I know that it does take time out of the day to listen in. Hopefully some of the tips and tricks can help you improve your trades as well, and look forward to catching up soon. All right, thanks, guys.